Hey guys, I'm Kalilah Reynolds and it's time for Money Mondays JA, brought to you in partnership with Proven Wealth. Well, today's topic was actually a question from Instagram. You guys are always asking me questions and suggesting topics in the DMs, also on YouTube, and I do read all your comments and take them into consideration, so keep them coming. So someone asked me recently, what happens when an IPO is oversubscribed? And you know, this has been happening a lot in recent times. IPOs open and close sometimes on the same day because they're oversubscribed. Well, first, let me explain what oversubscribed means. When a company is doing its initial public offer, IPO, they're offering a set amount of shares for sale to the public. Let's say they're selling 1 million shares in the company. When the IPO opens, the public is invited to apply for those shares. Now, it might be a particularly exciting company that's been recording strong growth year over year and has an attractive dividend policy, for example. Or it could just be the hype around an IPO. For whatever reason, there's a lot of interest in this particular company. So people put in orders for 2 million shares, but the company is only selling 1 million. That means it's oversubscribed. What's the company going to do? Well, there are different ways that a company can handle this. The first thing that will usually happen is that the offer will close early. You always hear an open date and a close date for an IPO, but sometimes you hear that an offer opened and closed on the same day. The other day you had the IPO for Caribbean Assurance Brokers, for example, which closed within 1 minute. If you're wondering how that's even possible, it's because you can apply for the shares even before the opening date, and the lead broker may start counting those applications before the opening date as well. When they realize, hold on, we already have more than enough orders, they'll make the decision that, listen, we can't handle any more orders. We're going to have to close this offer early. If we leave it open until the closing date, we'll only get more orders that we're not able to fill. Now, in some instances, you may hear a company taking the option to upsize the offer. For example, the Trans-Jamaican Highway IPO, which is closing today, Monday, March 2, by the way. It's closing a week early because it's been oversubscribed. They were originally offering 8 billion shares for sale, but in the prospectus, they put in an option to offer more shares if it's oversubscribed. That's called upsizing. So they're actually going to be selling 10 billion shares instead of 8 billion, and this allows them to accept more money. So that's one way a company can deal with an oversubscription. They can decide to upsize. But even with an upsize, sometimes people still want more shares that are available even with the upsized offer. When that happens, it means that if you applied for shares in the company, you might not get the number of shares that you wanted, simply because there aren't enough to give everyone everything that they wanted. So now you have to listen out for what's called the basis of allocation or the basis of allotment. And that tells you how the company is going to divide up the shares among all the people who applied. Again, let's look at the recent IPO for Caribbean Assurance Brokers, since that was oversubscribed. They were only offering a very small amount of shares to begin with. So you already know that those who applied wouldn't be getting much. And indeed, the basis of allotment was announced last week. And those who applied in the general pool only got the first 1,000 shares that they applied for, plus about 1.5% of the balance. That's barely anything. So let's say you applied for 100,000 shares. These shares were selling at $1.91. So you were willing to spend $191,000 plus fees. But because so many people wanted shares, you can't get everything that you wanted. You're only going to get 1,000 shares plus about 1.5% of the balance. So first, you subtract 1,000 from whatever amount that you applied for. In this instance, you will subtract 1,000 from 100,000 and you set aside that first 1,000. You already know you're getting that first 1,000. That leaves you with 99,000 shares in the balance. And they're going to give you 1.47%, almost 1.5% of that 99,000. That's 1,455. Now you can add that 1,000 you already knew you were getting. That's 2,455. So if you applied for 100,000 shares in CAB, all you're getting is 2,455. A minuscule amount, no doubt disappointing to the people who applied. And I did say in my review that this was likely to happen because of the small number of shares being offered. Another thing I said is that this is likely to have an impact on price. When these shares start trading, many of the people who only got this tiny amount are going to try to get more. As the law of supply and demand dictates, if you have a small supply and a high demand, the price is going to go up. You can demand a higher price for any item that's scarce, and that same principle also applies to stocks. So these are some of the things that happen when an IPO is oversubscribed. Hope that answers the question. That's it for this episode of Money Mondays JA, brought to you in partnership with Proven Wealth. Thanks for watching. Follow me on Instagram at Kalilah Ray and subscribe to my YouTube channel, youtube.com/Kalilah Ray. If you like this video, hit that like button and share with a friend, and then watch Taking Stock this evening. First up, the explosion of the Airbnb market across the island has been pushing well-needed cash into the pockets of many Jamaicans. But there's a painful side effect, the tightening of the rental market. We'll explore both sides with President of the Realtors Association of Jamaica, Andrew James, and the operator of an Airbnb in Meadowbrook, Fabian Littlejohn. And later, the analysts join Mark Gale on the latest stock market developments. We'll take a look at both the PIOJ and the Bank of Jamaica's latest reports, and stocks everywhere have taken a beating amid the outbreak of the deadly coronavirus COVID-19. We'll discuss. I'm Kalilah Reynolds. See you later.